All right, on that note, let's bring in a panel and discuss this. We got the market, we've got the Russell, and the message, the continuing message from this rally. All right, Matt. All right, but here's the thing, Jim. You're something of a fundamentalist also. A lot of BioTechs on that list that have been the leaders here. A lot of mergers in biotech, a lot of takeovers, and you talk about price for perfection. We saw last week when those names took a hit, they're starting to come back. A lot of firms defending Gilead, but that's a group that when it does get hit, it gets hit hard.
I mean, we talked about BioTechs last week on your show, whether they're in a bubble, and they've now had a nice bounce.
The next day they got hammered, too.
They got hammered the next day, but I will say they were particularly hit hard when the Fed and Yellen made her comments. I think in general, the small cap sector that we're talking about right now is hit pretty hard. And when the Fed actually announced they were going to be patient, and I do think people are looking for that beta trade. The view of the domestic market is very positive, and that is why I think the small caps. I had a great
tweet from a guy that says he likes watching the show, but sometimes he doesn't understand the language. He's got a lot of money, so he said he married well, but he just likes the show for entertainment value. When you said the beta trade, what does that mean?
Looking for that the little extra oomph, that one's going to trade a little more on the upside, a little more on the downside.
So more volatile, but to the upside, you're going to certainly exceed the overall market.
Yes. And that's the beta trade I'm talking
about. And I don't see why that goes away because the calendar changed.
And then, but the new insurance laws with Obamacare, there are new laws going in effect in this first quarter, and I think that's really just going to have a lot of effect on the
That might be a headwind to BioTechs because they're not going to get some of these drugs approved through the new insurance laws.
Why not?
Again, some of
they cost too much.
It costs too much, and some of these new programs are actually being very difficult on these high-flying drugs. So that's actually one of the headwinds, as far as I can tell. That's a risk to the biotech.
And the FDA was very loose the last couple of years.
And historically, when that's happened, you ride the wave. Now, when you get off, well, I don't know. That's the real deal, Jim. The market has become something of a rocket ship. Now, the critics will call it a Santa Claus rally, the Janet Yellen's Santa Claus, whatever. They're really upset and they're frustrated. I'm following a few on Twitter, and I mean, they are really upset about this. But it is something that we have to acknowledge at some point when these moves come too easy. I mean, everyone should be a little nervous.
And look, and I understand why people would be nervous, but I'd like to, if I can, to put them at ease. I'm less concerned about the speed of this rally. I think the sell-off we saw in October was overdone. I think what the market is saying right now is that was the case. People were under positioned, still light. Households and institutions were lighter on equities than they wanted to be. Also, what has driven the rally more than anything else? Good corporate earnings. Then I'll put the Fed, and I'll put an accommodating Fed in the second position. But the fact is, we are doing better, and that is why we're seeing this rally.
Although
I think you're correct, and I think you have to look at what is the government going to do? What's the Fed going to do? Are they going to sit there? That's one of the thoughts. If they start raising the interest rates, then you're going to see that panic, and that's going to cause what you're talking about right now.
I don't think we're going to have a panic. I think no matter what the Fed does, it's going to be still an accommodating Fed. Rates are still low. Even if they start moving rates up fairly aggressively, we are still going to be in a low-rate environment, which is why the marginal debt doesn't bother me so much.
But it's still going to panic investors.
For the viewer.
I was only going to add, we've been talking about student loans in your show for quite a while. It is a very troubled space, a lot of uncertainty. So I'm not a fan of the space. Between the two, actually, I like how well capitalized CECO is. But again, I'm not a fan of this space right now.
Okay, Jim, you're in a hospitality business.
Yep.
Good workers in that business are hard to find, and when you find them, they can command more money.
And they absolutely are. And then I agree with Scotty and Heath's point on this is a good thing. I have a cousin who, with that little increase that you highlighted, was able to move out of his mom's house, rents an apartment in Brooklyn now because that little extra money is exactly what he needed based on the hours he's working to basically now take down his own place. So he is spending more because of this.
So let's spread this beyond Jim's cousin, okay? Let's say this is really going to happen. That means more money floating around, and what does that mean? Our viewers want to know how they can make money off of it. Give us something for like when your nephew and all everyone joins them.
I'm with you. I'm going with Marriott because Marriott consumers.
Isn't that a little expensive?
Well, they're going to have more discretionary spending. Travel is going to increase. They have lots of levels of Marriott, global chain. They're expanding, and I feel Marriott also is going to be able to withstand these wage increases that are going to hit a lot of small companies. Marriott can handle that increase in their cost basis because again, they're big. They'll pay the wages. They'll get the better employees. You'll get better service.
These hotel stocks have done extraordinarily well. What do you think, Jim?
No, actually, I like it. I think they got hit really hard from a bad quarter, and maybe they deservedly so. But they have a lack of debt in their books. Most of their customers have no solution right now to protect themselves, and I think they can withstand, and they can actually, the timing of contracts, they can actually deliver. They help keep support costs down. So, again, I like where they are, how they perform now. Again, as you said, it's execution, but I like them.
All right, that was me being real subtle earlier today on Outnumbered in the Five. Listen, we've been debating this whole thing, the divide in this country. Police, the public, it really has gone into overdrive, guys, in New York City here. And, you know, I hope we get to the point where it starts to come back around where, you know, people aren't intimidated or even manipulated, if you will, by the outsiders, by even the media, but certainly not by the Al Sharptons of the world. Because I think where we were heading, or where we are right now, it's pretty precarious.
You mentioned growing up in the city back in the 70s, and I'm with you on that in terms of what the city was like. You know, I think the assassination of those officers, and while that was done by an outsider, I do think that was a big wake-up call. And I like the way the pendulum seems to be shifted more about peace and about standing up for the police officers, for the union, and actually let's bring some strength back to the city. But again, I think it did calm some things. Unfortunately, it took a horrific act to bring that kind of sensibility.
And the polar vortex saved oil and natural gas, because I got to tell you, they say it's going to be freezing here in the next 24 or 48 hours. The country probably needs it, at least if you're in the oil and gas industry. Guys, crude oil in the 52 area, natural gas getting hammered again. After the bell, a company, a small name in the space, warned, suspended their dividend. That stock is down about 20%. You know, Jim, I know it's great for the majority of the country, but it's starting to get a little worrisome in other areas.
Not great for Texas, for example. I think certainly the cold weather could be a help, but I still believe the issue right now is supply side. And the Saudis are digging their heels in. The U.S. clearly has great producing power. So I still believe that until, look, low prices will stop low prices, because at a certain point, it's better to leave it in the ground than take it up. And that itself, I think, more than the cold weather, will jack prices up.
So I believe Jim is right. Supply is a major issue. But